Hey everyone, this is Kirk here again at Option Alpha. So in this video, I want to show you how to start day trading. And I'm calling this one the OK, Better, Best Guide to Safely Getting Started because there's a lot that we can talk about. I don't think I've ever really tried to tackle this particular topic of day trading, but what I want to try to do here is to give you a framework on how you can get started and how you can get moving in the direction if you're interested in day trading. I promise this is not going to be a make millions overnight or get rich quick or whatever. In fact, it'll be the antithesis of that. So if that's what you're looking for, you can skip to another video that promises hopes and dreams. I want to give you a practical guide on how you can get started here. And then I'll link a bunch of resources below this video so you can keep going. I can't cover everything in this one, but I'm going to give you the high level on how you can get started. So the first thing that I want to walk through just really quickly, if you're brand new, is what is the concept of day trading? Day trading is actually a very simple concept. All it means is you're going to open and close a position conceivably in the same day. That's where the name day trading comes from. That's, I guess, the original intention of it, right? But it also might mean that you open and close a position over the course of a couple days. Some people then start calling that swing trading or position trading, but in its more classical sense, if we were to say day trading, then day trading is typically opening a position and then closing that position the same trading day. This is why people love to do it or are really interested in it, because the theory is that you have all of these potential profits that you can make on a single day, and so you don't have to work a lot. You can just day trade. We know that's not true, that it takes a lot of hard work, and it takes a system, and it takes, a strategy that you're running to be consistent over time. But the concept is to open a position and close a position the exact same day. So for example, here would be a potential day trade. I'll show you it in two different directions because you can day trade in both directions, and then the strategies that you use in those directions can be different. But just conceptually, this is a 1 minute level chart for the S&P 500. Just the other day, I think, whatever time I was taking this. So the market opens here and the market closes over here. And so, for example, if the market were to drop, you might go long or buy the market. You wouldn't buy the SPX, but maybe SPY or some other, index, whatever. You go long the market here, and that's your entry point. That's where you buy, and then you sell here, and that's where you close. Again, it doesn't really matter what ticker we're looking at. It's just conceptually, this is one way to trade. This is the long side of a trade. So you're hoping that you buy something at a lower price, and then you later sell it at a higher price. That's just the name of the game here. You get that move. You can obviously do this in the opposite direction. So this is called shorting. You can do this. A lot of people don't know you can do this. You can do this with equity. We don't suggest it. You can also do it with option contracts where you get into a strategy where you're trying to profit from a bearish move in the underlying security. But essentially you sell or go short. They're all the same thing. And you try to take advantage of a declining price. This is actually one of the fun things about trading, I personally think, is that you can take advantage of sideways moves, up moves, down moves, etc., and still build strategies that work in those markets. So in this case, you sell here, the market goes down, you buy to cover or close your position. I'm going to show you an example of this, of a strategy that just did this earlier this morning for me, so you can see it later in the video. Okay, so now that we have kind of the broad strokes on day trading, there's three ways to start day trading. I think that there's the old way, the hybrid way, and the automated way. You can say these are the okay ways, the better and best ways. So I want to go through these and show you an example of each of these. Again, I'm not telling you exactly what strategy to trade or how exactly to do it. It's just conceptually, how do you get started on this? And then I'll link a bunch of resources in here so you guys can get started. So the first way is the okay way, and the okay way is the old way. And the reason I say it's okay is because it still works. You can still do it. It doesn't mean that you should be doing it anymore, but it still works. It's like if you wanted to write a message to somebody or contact somebody, you can write them a letter and you can mail them a letter. You could, send them a postcard. Like, does it work? Yeah, it still works, but I don't know if it's the most optimal way, the best way to communicate with somebody, but it's definitely the old way. And so the old way is this: you sit down and you watch the markets. So this is what a lot of people traditionally do or get used to doing. Feel like there's some sort of clue or hidden gem, or there's some special signals or chart patterns that start to develop that give them a signal that the market's going to go higher or lower. That's never really worked for me, but I think a lot of people do it, or you certainly see a lot of videos of people doing it or trying to do it. You watch the markets, you wait for that perfect entry, and then you manually open a position. So you go into your broker account, You try to open a position. You hope that you're really fast in opening that position and you get a good price for that position. You fill that trade. Sometimes it takes a little while to actually work the order and fill the trade, but you manually open the position. Then what you do is you sit again and you wait for an exit. So now you're in the position. Now you have to wait for an exit. You have to hope the market does what you think it's going to do, go up, go down, and you have to deal with all the mental, like psychological barriers that really kind of, throw you off as a trader. So is it going up? Did I make the right decision? Did it go up far enough? Should I take the position off? Should I, use a stop loss and get out of the position? And whatever the case is, then you manually enter orders to exit. So you are the bottleneck that says when you get in and when you get out. And so this means that if you get into a position, you got to sit there and wait. You hope that you don't get busy or you have to do something else or go to the bathroom and something happens in the market, right? And you have to actually get out of the position. So for example, if you were to do it like, let's say we're just trading gold here, for example, and this is just a 1 minute chart on gold. I'm not saying to use a 1 minute or 5 or 15. It doesn't really matter. But let's just use this as an example. Gold's had a crazy day, but now maybe it's, breaking out. I don't know, whatever the case is. Okay. So I want to trade gold. So I go into my traditional broker platform. This is not Option Alpha, but this is what most people do. So I'm just showing you what most people would do or you might have done before. And you might buy some shares of gold or trade an option contract around gold. I'll get to that here in a minute. But let's say you want to trade some gold. So you got to, kind of massage the price here, but we're just going to review and send that trade. And now we're into a position in gold. Okay, no big deal. I got filled on that. Not too bad, not too hard to do. It's actually very easy. Friction level generally pretty low. But now what do I do? Now what I do is I have to come back here and actually immediately since I filled that trade, gold has retreated. But now what I have to do is I have to come back here and I have to stare at the screen like a crazy person, looking for that exit signal or whatever the case is that I would get out of the trade. So now let's say that I, find that exit signal and we fast forward time and now it's 20 minutes or 30 minutes or whatever the case is. I'm going to close the position. I'm going to unwind the trade and now I get out of the trade, right? And so that's the whole process, right? Now I've considerably speeded it up because it's only been a minute and I'm doing this video, but what you're doing is you're just sitting there waiting for these things to happen. You're waiting for a good profit. You're waiting for some level to be hit or some, technical level, whatever the case is, it doesn't really matter. You're the bottleneck and you're in there making those trades. So you're just kind of going back and forth in your broker platform. So that's the old way of doing it. It's pretty antiquated. Like it's not the right way to do it. It's pretty antiquated. It's not the most optimal way to do it. It's like sending somebody a letter or a postcard if you just want to say like, hey, what's going on? How are you doing? Right? So there's a better way to do it. And I call this the better way to do it because it is significantly better than the okay way, the old way. And that's the hybrid way. So this is the more hybrid approach. I think that if you are starting to day trade or considering starting to day trade, once you have an idea of a strategy or a concept of a strategy that you want to trade, this is probably the most optimal way to get started just to kind of flush out what you're going to do as a trader. So this hybrid approach basically still has you, that's why I said better, it's not best, but it basically still has you watching the markets, waiting for an entry setup or signal. So you're still going to do that. And a lot of traders, honestly, love to do this. So many traders, this is what they want to do. They want to be the one that pulls the trigger and says, yes, get into a position, go short, go long, whatever the case is. So what you do is you manually open a position still. You are still in control of opening the position. And then what you can do is you can use exit options and instant exit options inside of Option Alpha, obviously, to automatically manage the position for you. So this is why we start to take this hybrid approach, which is a significantly better approach because now you're doing the best thing you can do as a trader, which is potentially trade execution for picking the setup or the strategy or the timing. If you think you're great at that and you want to do that. And then let automation take over the management of it so that you have predefined levels for exiting and removing the position. This is the best way to go if you are going to day trade and you want to be in control of the entries. Now, just for the record, I do both of these where I do the better strategy or the hybrid way and I do the automated way. I do both. Some strategies that I run, like currently my GEX strategies that I run are a hybrid approach, which I'll show you here in a second, where I'm actually entering the position myself, but I'm letting my bot take over the management of that position using instant exit options. So how does this work? So if you are in here and let's say you're in a bot that you create, again, a bot is nothing more than just an automated system that can run automations for you, and it's connected to your brokerage account. In this case, this one's connected to my live TradeStation account. What I do in this bot particularly is I will open a new position, and when I open that new position, let's say I want to go long gold, for example. If I want to go long gold, the same type of setup that I did inside of my regular Thinkorswim Schwab account, if I want to go long gold, I can do it right from here. I can put in a price that I'm willing to accept. I can actually use something called smart pricing, which will work through the bid-ask spread and try to attempt to get better pricing for me. That doesn't mean it's always going to get better pricing, but at least I'm not entering an order that is way outside of where the market is. So I could say, look, I'm going to use normal pricing, normal smart pricing, so 4 different prices up to 10 seconds apart. And then what I can do here is I can set what are called exit options. So exit options will automatically manage my position for me and constantly run when the position's open. It's like a little mini automation or bot that is always watching your position for your predefined exits. So for example, I could say, I would like to take a profit of $10 or more. So as soon as I have a $10 profit, I'm just using a regular, stupid, simple example. If I have a profit of $10 or more, use fast smart pricing to try and lock in that $10 profit. Now it won't ever try prices that don't get you a $10 profit. So it could try for better pricing, but it's never going to go below your $10 profit. Or if you have a price target, let's say that gold right now is trading at 456. So I would say maybe at 460, I want to get out of this trade. So if the price of the security is 460 or higher, then go ahead and use fast smart pricing and get out of the position, no matter what the position's value is, right? So these would be kind of conflicting in this example. So I'll remove the price target, but at least you know how it works. We could do a stop loss. So we could do a percentage of debit stop loss. You could also do a dollar amount stop loss. So I don't want to lose more than $50 on this thing. Again, I'm not saying to use exactly these settings, but just conceptually, this is what you could do. And you could also execute a trailing stop. So if you didn't want to do any of these, or if you wanted to do a different, type of it, you could say, look, after a 5% return, close on a, 4% or 3% pullback or something like that. You could execute these trailing stops also. So I'll just choose these 2 right now and just as an example of how it could potentially work. And then once you hit save, now that is saved as an exit option right here. So you can see it's automatically in there, which means that the second that I get into this position, I don't have to worry about it anymore. I know that I have a profit and a stop loss that it's monitoring for me in real time. So, all right, so I updated this price. We're going to go ahead and place this trade and send this over to our broker platform. So you can see it's going to start trying different prices, and we actually got filled right there at 457.08. So you can see it was actually willing to go through a lot of different prices. Here is your pricing for your bid-ask spread, or for your different smart pricing intervals that it was going to try as it tried to fill the trade. Did get filled on this pretty good. And now what you can see is that automatically my exit options are starting to work, and they're tracking the highs and lows of different exit options. So if I wanted to adjust these at any point, I could go in here and I could say, okay, I want $15 or more and adjust this. And now it's automatically adjusted. But now what you see here is you see that it's in real time tracking the highs and lows automatically for me. So as soon as I have either a profit or I hit my stop loss, immediately I'm out of this position and out of this trade. Now I did this example using just long equity, but the exact same thing works for your option trades as well. So if you are going to start trading options, then you can do this exact same thing also with your option trades, even save those as presets so you could use them over and over and over again. So you can see it's a much different approach and more of a hybrid approach, because once I get into the position, I'm literally recording this on the screen with you. I'm not watching the markets. I can walk away from it, and my bots will always take over management for me and get out of the position. Again, they're just going to follow the exact rules that you put in here. And as soon as it starts to hit those, you'll see some trades start flowing in here, and you'll get status updates and email alerts if you have those activated for any trades that are filled. So one other thing I wanted to show you too is I said that I also do this hybrid approach for my option trades. So here are some GEX trades that I've made. You can see I tag some of my trades as GEX trades. And if I'm ever going to do any day trades in GEX, I will usually enter a position myself manually using this hybrid approach, but then I will use exit options to manage my position. So here you can see I got into the trade manually myself at 235, and then I set an exit option for a $50 profit, and it got filled at 240. So I was only in the trade about 5 minutes, and it reached my $50 profit and removed the position for me. And then another example here would be this one right below it, which is, I think, earlier in the same day even. I got into a trade at 9:58, and literally 2 minutes later, it had a profit. I could have been sitting there and watching it, but because I used exit options and they're constantly running for my position, it automatically got the position out and filled the trade for me at 10:10. So it worked the order for about 12 minutes and got the position out and took the profit. Okay, so the last way to trade is the automated way. So this is what I do most of the time. Of course, this is what we're known for here at Option Alpha, is making automation a lot easier for you. And the automated way basically is the entire process is already set up inside of your bots. So basically you do whatever you want. You can work, you can not watch the markets, you can watch the markets, play with your kids, read a book, go swimming, do whatever you want to do. You do whatever you want to do while a bot executes your entire strategy for you from start to finish. So the cool thing about using automation when you get to that full stage is you can let the bot scan for opportunities for you, enter positions, and manage them 100% for you. So I have an example of this so you can see how it works inside of my account using a bot that I'm currently running, which is my orb or opening range breakout bot. Now, it doesn't matter what the strategy is. I'm just using this as an example. I'm definitely not saying this is the only way to do it. I'm just using this as an example of how it works in my account using a live bot that I'm running. And I've done videos on my entire process of getting to the opening range breakout bot that I'm running. So I'll link those below this video as well. But my entire process for the opening range breakout is that early in the morning, it will determine and watch the opening range of the market. That would be something like this. And as soon as the market breaks out of that opening range that's set, I think it's a 60-minute opening range, and we have this breakout, then I would enter into a position that would either try to play that breakout to the downside, so a bearish position like this example, or if the breakout was higher, I would play a more bullish position and try to take advantage of the market, potentially moving higher or staying higher for the rest of the day. So in this example, if we have the breakout lower, I would get into a bearish position. And if the market continued to go down, if it hits some certain predefined limits for me for exiting the position, I might close the position for a profit later in the day. Now, this is exactly what actually happened earlier today for me, fully automated inside of one of my bots using this opening range breakout. So here you can see this is a bot that I run. Again, I've turned this on live and gone through the entire backstory and behind the scenes of how I got to this point in other videos I'll link to below here. But this is connected to my TradeStation account. I have my automations and my exit options on. And essentially what this is doing is this is constantly scanning for either a bullish or bearish breakout. So what is a little bit different about this bot compared to my day trading bot that I have is that this bot has automations that are scanning for opportunities for me. This is the difference here in a fully automated strategy versus the other one inside of here. I don't have any automations that I run in here. I just have a bot that I will manually put trades into and then use exit options. But in this case, I have with my 60-minute orb bot, I have these automations that are going through different criteria and checking the market for me every single minute. So it will do something like check and see if I can open a new position. If I don't already have a position open, it will see if I pass some market criteria, like it's not a Fed meeting, the market's a normal close, and the 60-minute high is above the range, or the 60-minute lows are not below the opening range. And then I have some other criteria that I put in here. Basically, everything that is specific to your strategy, just put it into your bot and let your bot check that. There's also some indicator checks that I do, like SPX ADX 14 is above 15. And whatever the case is, then it opens a new position. And I've already told it what type of position to open. This is the exact position that I want it to open. And I can use some exit options for any of these positions. I can also put in some additional criteria. So only open positions with a risk reward ratio greater than 10%. Notice you can do a lot of stuff in here inside of automations. I'm not going to go through all of it right now, but you can see it's scanning for these different types of opportunities. And notice that's all it does all morning until it finds an opportunity. And once it finds an opportunity, then it can get into that opportunity. So today is the 12th. This is when this bot opened the position. It already opened this position earlier this morning, fully automated at 10:35 a.m. And so at 10:35, I can see the log and I can see that the bot could have opened a new position today. It didn't already have a position in place, passed all of the market indicators, all of my checks, and opened this short call spread position. Now, if we go over to SPX, we had a massive breakout earlier in the day, right? Market's not done trading today. But you can see this is about the 10:30 mark right here, the 9:30 to 10:30. That was the opening range. Then we had the breakout below that range. My bot executed a short call spread, which is a bearish position, and the market just absolutely tanked all the way down. And so what you can see in here is that later on, I had a target that if it ever got lower, the price target of the exit option price target that I had set was 10 cents or lower. So if I had sold an option contract and it basically became worthless really quick in the day, just buy it back and lock in the profit. There's no sense. In this case, I took in $115 profit. The most I could have taken in was $125. So I'm okay closing it early for 10 cents and taking 92% of the potential return. So what it did though, is you can see that later in the day at 11:17, it hit that target and tried to get into a position to fill. Now, this is the kind of the cool thing about it is that not all the time are you going to get filled because the options market does move fast. But if the pricing is there, it will just keep trying until it actually fills. And you can see that these orders were canceled. So it attempted to fill the trade. This is not you doing it. This is your bot doing it for you. And then eventually at 10:26, it filled the position at 10 cents and removed it from my account. So now that bot has completely taken that position off and taken the profit, and then it will just wait until the next day to get into the next position. Now this one's actually a little bit different because I created this one from a backtest. So if you are interested in doing some day trading or zero DTE trading, you can also backtest your strategies before you even get to the point of running them like I did. And then once you have a strategy that you like, you simply can go over here and create a bot automatically from the backtest. So this strategy that I'm running right now, the 60-minute orb, was created from a backtest. I did not put all of those decisions into the automation, although you can modify them and adjust them and add to them if you want to. I simply backtested my strategy and then went over here and created a brand new bot, connected it to my TradeStation account, and then created the bot. That's exactly what I did and turned it on. So that's how that bot is currently running right now, is from the combined backtest that I ran of two different types of breakout strategies, whether it's a bullish or bearish breakout strategy. So again, that's the three different ways that you can start day trading. I hope this video was really helpful. Again, I'm not going through every single strategy that you can use in day trading, but what I wanted to get across is that there's a lot of different ways you can start to day trade, whether you use the old way, which is totally fine, the more hybrid approach, which is definitely more suggested, or the fully automated way. You can use those different ways of trading as kind of guideposts as you start your journey. So if you have any questions, please let me know. I'll add a ton of resources right below this video, but if you found this video helpful or thought it was, good video for you just getting started with day trading, please let me know. Like, subscribe, share this video with a bunch of your trading friends. And until next time, happy trading.